Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your boys here, Bert, the Hitman, and Lanny, your favorite dividend investors out here on not just YouTube, but all of social media, guys.
Yeah, so help us reach 20,000 subscribers by smashing that subscribe button, giving this video a thumbs up. Let's freaking go. It's Sunday morning. It's time to talk about dividend stocks, and whoo, do we got some great ones for all of you today.
That's right. Today, guys, we're going to be focused on two dividend stocks that, as we're recording this on Thursday, July 11th, I had put this analysis together on July 10th because I was like, hey, these two dividend growth stocks are now just too cheap to ignore.
Mhm.
Obviously, the CPI news came out. Oh, inflation's cooling. Oh, rate cuts happening. Again, the overreaction to all the news sent pretty much everything but tech roaring upwards here to finish off the day. I mean, just look at the chart, you'll laugh. Because in fact, I think one or both of these stocks were actually down in the beginning part of the day. Somebody can correct me if I'm wrong as they
They
watch this
were.
video.
They were.
Um, but they
Yeah.
just continue to rise up throughout the day here on the close of July 11th, guys. But both stocks are getting crushed this year. One stock's down over 20%, one stock's down 30%. And ironically, these two undervalued stocks or at value or overvalued stocks, depending on how everybody looks at it, are almost the same stock price.
Yeah, it was wild. I didn't do double take to make sure that the stock prices weren't exactly the same. Doesn't happen too frequently. So what we're going to do is we're going to talk about the companies here, run them through our stock screener, which has three metrics: the PE ratio less than the S&P 500, dividend payout ratio less than 60%, history of increasing those dividends. We look at that 5-year dividend growth rate and how many years they've increased that dividend. And lastly, bonus metric time. We talk about that dividend yield.
And we're going to take this again the way that you guys like the stock analyses. We're going to go metric by metric on each of the stocks. So we'll cover both
Ooh.
stocks, same metric, and move down the list here, guys. Bird's pumped up. I'm juiced up. SummerSlam is coming to Cleveland. So if you guys have extra tickets, feel free to send it to Bert and my way. You know the email address, dividenddiplomats@gmail.com. Please, we appreciate that, guys. Um,
Only use it for SummerSlam tickets, though. That's all we care about right now.
but
All right, let's
two
go.
stocks, two stocks, guys, to peel back the veil here. We are talking, yes, again, you can hate it or love it to hate it. We're talking about Starbucks stock and Nike stock today on this video, guys. SBUX and NKE. Starbucks down 21% this year. Nike down over 31%. Both getting kicked out of them.
Yeah, that's right. It's like the market's just macho man up on the turnbuckle, and they're just laying down. And you're just getting ready for the big old-fashioned elbow drop. These stocks cannot catch a break. Nike in particular has been the one that has just fallen off a cliff after their last earnings release. They showed no sales growth and showed weakening outlook and weakening consumer demand. That's what's dropped that price into the low 70s.
Low 70s again. Starbucks is at 73.30. Nike's at 73.39. Nine
Yeah.
cents separates these two stocks. So if you guys have $150, feel free to grab yourself a share each. But again, not professional advice. Let's dive into the metrics, right, Bert?
Yeah, let's jump right in here. I can start with Starbucks, Lanny. If you want to cover Nike, I'll kick it off with that PE ratio. The prices as of Thursday, July 11th. So Starbucks prices, you said a 73.30. Earnings per share is 332. That's a price to earnings ratio of 22.08.
22 again. Lower for Starbucks,
Mhm.
obviously higher than what dividend investors want to see. They want to see 18 and below. Sometimes it's hard to get with Starbucks. Nike, just do it. 73.39. Expectations are only $2.89. So that's an even higher price to earnings ratio right now at 75.39.
All right, Starbucks annual dividend is $2.28. That gives you a payout ratio of just under 69%.
Oof, dividend growth might be a little bit tight going forward for Starbucks.
Yeah, what
So
about Nike?
let's look at Nike. $1.48 in total per share, 37 cents a quarter, 51.21%, right in the middle of that 40 to 60% payout ratio. Pretty safe dividend right now.
I would say so. If you're going to be a struggling company, Lanny, you definitely want to see a payout ratio that is in that sweet, safe spot. So that's perfect for Nike. Moving to metric three, dividend growth. Starbucks, 5-year dividend growth rate's 9.25%, and they've increased that dividend for 13 consecutive years. However, not expecting them to match their 5-year average dividend growth rate with their next dividend increase. I'm expecting low increases from Starbucks for the foreseeable future until they turn that sucker around.
And then turn that sum around and
Yeah,
stick
that's
it straight up your candy. Guys, to get into Nike's dividend growth, 11% 5 year average, 11 plus years. They probably won't be in the single digits, like, the 2 to 5%, but I can see them being in that like 6 to 9% range for a
yeah,
few years.
yeah, I can see that. Starbucks, their yield with the fall has climbed up to over 3%. It's 3.11%, which is 84 basis points above their 5-year average yield of 2.27%.
Similar shoes here, not no pun intended on
Hey,
Nike.
hey.
Okay, let us know in the comments if you like that unintentional pun for your boys. Um, so the yield has also popped up to 2.02% versus that historical average of 1.20%. So almost two times the yield right now with Nike.
It's crazy to me that Nike's yield is over 2%. That's a huge threshold, and that's why it's popping up the watch list. Hmm. Hmm. Hmm.
Hmm.
All right. So how's Starbucks doing year to date? Down 21.75%. Over the last 52 weeks, they are down 26.77%. What about Nike, Lanny?
Well, actually, Bert, well, at the 5 year, it's at the bottom there on the
Oh,
chart.
5 years. My bad, everybody. 5-year Starbucks is down 19%. Bum, 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 bum. Wow.
Yeah, just negatives all around right now. Same with Nike, 31% down this year alone. Last 52 weeks, dating back this time to last year, down pretty much the same, 31.66%, down overall over the last 5 years at 18.60%. All
Cool.
right, Bert, which one do you think it shows better value right now?
Well,
That's
better.
the hardest question.
Yeah, I grabbed 3 shares of Starbucks this week, and I've been building up my position in my taxable account. My wife has 100 shares of Starbucks in her Roth. I have now, I think, 54 in my taxable. So we're loving Starbucks. I'm going to continue to add in this price range here. But Nike, from Nike's historical perspective, I think is also starting to get into that value zone. What are your thoughts here, Lanny?
Yeah, I mean, similarly, I was buying Starbucks, a couple shares here and there over the last few weeks, and I've been kind of keeping my eyes just on, what the market's really doing here, what the PEs really are looking like. Both are in the 20s, so not screaming like, hey, it's, you know, so cheap right now. But that's what the question here to this video is. Are these stocks too cheap to ignore? Compared to themselves, they are less expensive as a stock price. PE ratios based on projected earnings are lower than they historically are
Yeah.
at. Starbucks usually at like the 25-ish mark. Nike's usually near that 28 to 32 mark, right, Bert? We'll have to
Yeah.
fact check that.
Yeah, and I
Um,
think it's hard with Nike. Nike is really hard because you don't know what to do. This is their first, they've been down, but this is their first massive quarter where they've just seen the drop. And it seems like they're still searching for answers, which is what I think is the interesting thing with Nike. So I don't know if it's at the full value yet where I'm now really interested after reading the last ranges. I thought it'd be the low 70s, but to me, I think there's still a little room to go before I'm nibbling and biting for Nike.
yeah. Right now, I'm not running to buy each of the stocks. I have been buying Starbucks at prices
Mhm.
at this price, slightly below it, slightly above it. But now that I feel like, okay, now let me just kind of let the market kind of dictate now which way it really wants to go. I'm happy with what I have with Starbucks. If it drops, into the low 72, 71s, I will probably grab another share or two more. Nike's got to be right now, probably for me, another couple bucks on the stock price, maybe, another 5% drop before I can really, go, okay, is it time to start a new position with this iconic company?
Yeah, you're like, if it's in the 40s, I'm all in, but only
Yeah,
if it
it's,
gets
it's
into the
it's a
40s.
penny stock here. No, what about you
Yeah.
guys though? What are you guys doing about Starbucks stock and Nike stock? Or do you think these are two stocks to buy right now? Are these two stocks that are going to be able to juice up and grow that passive income in the future after it gets through the storm?
Yeah, if you haven't already, subscribe to the channel, give this video a thumbs up, and remember, I believe in Joe Hendricks. That one was for you, Annie.
There it is, guys. You're either with us or you're against us, Jack. That was Bert, the Hurt, and Lanning from the Dividend Diplomats. Over and out.